Before we get started, let me say this. Everything you're about to learn is purely for educational purposes only. I'm not a financial advisor. What I'm sharing with you today comes from my own backtesting and experience. So before you take this onto a live account, please, backtest it, refine it, forward test it on demo, and make sure it fits your personality and your style. Trading involves risk, and if you don't respect that, the market will teach you the hard way. Let me ask you something. Have you ever heard of the Quasimodo strategy in Forex? Most traders know the basic version of it. You see a head, you see a shoulder, price comes back, boom. You enter, and hopefully it plays out. But let me be real with you. That's the kindergarten version. Today I'm going to show you the secret advanced Quasimodo setup that no one is talking about. This is something I discovered after rigorous backtesting. And the craziest part? It's one of those strategies that once you see it, you can't unsee it. You'll start spotting it everywhere on the charts. And here's the kicker. When the normal Quasimodo fails, instead of crying and giving up, this version actually turns that failure into an even stronger setup. That's right. A failed Quasimodo can actually become the foundation for a profitable one. But before we jump into the advanced version, let's make sure we're on the same page. I want you to understand the basic Quasimodo pattern first, as if I'm explaining it to a complete beginner. So imagine price is making a move like this. First, it creates a low, then it creates a lower low. After that, it makes a higher high. Then it pulls back, creating a new higher low. And finally, it gives us that little retracement back into the zone, the Quasimodo shoulder. This structure basically tells us, hey, price was trending in one direction, but now the market has shifted and it's ready to go the other way. So the Quasimodo is really just a fancy way of saying liquidity got swept, structure shifted, and now we've got a zone where smart money wants to enter. Now, that's the theory. But here's the secret sauce. Most traders stop at this level of understanding. They just see the shoulder, set a limit, pray it holds, and when it doesn't, they blow up, rage quit, or chase another setup. But what I discovered, and what I'm about to share with you, takes this pattern to a whole different level. Because I found that when Quasimodo fails, it doesn't always mean the market tricked you. It often means the market was building another, even better Quasimodo right behind it. All right, now let's go deeper. I told you earlier that the basic Quasimodo is just the surface. Here's where things get interesting. Whenever I spot a Quasimodo setup, I don't just jump in like most traders do. That's the fastest way to donate your money to the market. Instead, I stop and I ask myself one powerful question. Where is this setup forming on? If the answer is, it's forming on nothing, just floating, in the middle of nowhere, then I skip it. I don't care how juicy it looks. I don't care how clean the candles are. If it's not forming on something significant, I don't touch it. But if the setup is forming on a failed Quasimodo, one that didn't play out the first time, but is now acting as a solid support or resistance zone, that's when my confidence shoots up. Because what I've noticed after hours of backtesting is that these are the Quasimodo setups that have the highest probability of holding. It's like the market is saying, okay, we fooled the crowd the first time, but now we're ready to pay the traders who were patient. So here's my personal rule. I never take a Quasimodo setup if I'm not sure what it's forming on. If it's forming on random price action, skip. If it's forming on a failed Quasimodo level that is flipped into support or resistance, I take it, and most times it delivers beautifully. And let me be brutally honest here. If you keep trading Quasimodo setups without checking what they're forming on, you're gambling, not trading. But once you filter it the way I just showed you, you're no longer guessing. You're trading with logic, structure, and probability on your side. And that's how professionals survive in this game. Now let's really break down the version of Quasimodo I personally trade. Most people just see a shoulder, a head, another shoulder, and they scream, that's Quasimodo. No. That's baby level. If you trade it like that, you'll blow your account faster than you can say margin call. Here's my refined process, and I want you to pay attention. Step 1. the liquidity sweep. First, I look for a liquidity sweep. What does that mean? Price takes out a level where traders have placed their stop losses. Imagine equal highs or equal lows. Those are magnets. The market comes, sweeps them clean, and grabs that liquidity. That's my first clue. Step 2, break of structure, BOS. Second, I want to see a clear break of structure. The sweep alone is not enough. The market has to prove to me that it's shifting direction. If it doesn't break structure, I don't care how nice it looks. It's not my setup. Step 3, 50% plus retracement, which forms the structural liquidity. And this is where it gets very important. I want to see price retrace at least 50% or more. Usually it comes back into the previous shoulder area or close to it. This deep retracement is where retail traders start to think, oh look, it's bouncing again, let's buy. But in reality, this creates what I call structural liquidity. Money sitting there waiting to be grabbed. Step 4, another BOS, confirmation. Fourth, I wait for another break of structure. That's my final confirmation. When this happens, I know the market isn't just playing games anymore. It's actually ready to move. Step 5, the POI, point of interest. And here's the part almost no one talks about. The POI, the exact space between the liquidity sweep and the structural liquidity retracement. That's where I set my trap. That's my point of interest. That's where I place my limit order. Why? Because that zone is where the market manipulated traders grab their money and then set the stage for the real move. That's where smart money sits. That's where I want to sit. So when you hear people scream about Quasimodo setups, remember, they don't trade it like this. This refined version? This is the one that consistently shows results in backtesting. This is the one that actually respects the market's psychology. To recap in simple terms, step by step. 1. Liquidity sweep. 2. Break of structure. 3. 50% plus retracement into the shoulder equals structural liquidity. 4. Another BOS equals confirmation. 5. POI between sweep and retracement equals entry zone. That's my refined Quasimodo setup. Simple but deadly effective. Now let's take this even deeper, because this is where a lot of traders get fooled. I'm not just looking for any random wick that sticks out. No. The liquidity sweep and the break of structure must be clear and visible. Not those tiny little spikes caused by wide spreads. Not those weird wicks that only appeared because there was a high-impact news release. If it looks suspicious or abnormal, I don't touch it. I want to see actual candles closing clearly through levels. I want to see a clean sweep of liquidity that everyone can recognize. Not just some broker glitch. If the sweep is not obvious, I don't count it. Same thing with the break of structure. If the BOS is just a wick that poked through and came back immediately, I ignore it. That's not a break of structure. That's the market trolling you. Remember this rule. If your liquidity sweep and your BOS are not clear to the eyes of a child, then it's not valid. Step 6, the failed Quasimodo flip, my confirmation filter. Now let's combine this with my personal filter. Before I take any Quasimodo setup, I ask myself a very important question. Where is this setup forming? If it's forming on a failed Quasimodo, which is now acting as support or resistance, then I know this setup has a very high probability of holding. If it's forming in the middle of nowhere, without context, I don't touch it. I don't care how perfect it looks. Context is everything. So to be clear, failed Quasimodo flips into resistance, I look for sells. Failed Quasimodo flips into support, I look for buys. And this is where the magic happens. Because when you combine the refined Quasimodo structure with the failed QM flip, you filter out 80% of the trash setups. That means less false signals. That means less confusion. That means higher probability trades. And remember what I said earlier. The liquidity sweeps and BOS must be crystal clear. If they are messy, if they look like broker spikes, or if they come from news candles, I ignore them. You want clean structure, clean sweeps, clean breaks. That's the only way this strategy will work consistently. Now let's talk about the part everyone loves. Entries, stop losses, and targets. This is where most traders get destroyed. Not because their setup was wrong, but because their risk management was a joke. Listen carefully, because this is where discipline either makes you rich or keeps you broke. Step 7. Entry at the point of interest, POI. When I mark my refined Quasimodo setup, I don't just jump in blindly. I wait for price to retrace back into my POI zone, the space between the liquidity sweep and the structural liquidity retracement. That zone is my entry trigger. That's where I set my limit order. Why limit orders? Because they keep me patient. They stop me from chasing candles out of fear. They help me stick to my plan instead of panicking. Step 8. Stop loss placement. Your stop loss is not random. It has a very specific place. If you're selling, it goes just above the protected high. If you're buying, it goes just below the protected low. Why? Because that high or low is what structure is protecting. If price takes it out, then the setup is invalid. Simple. This also means you're not putting your stop in weak spots where the market can spike you out with spreads or newswicks. You're protecting your capital with logic. Step 9. Target selection. Now this is where people go crazy. Everyone wants to flip $100 into $100,000 overnight. That's why you blow accounts. This strategy, when executed properly, can give you a realistic 1 to 2 or 1 to 3 risk to reward. That means if you risk $100, you can make $200 to $300 consistently. And listen to me carefully. That is how accounts grow. Slowly, consistently, professionally. Stop holding on to trades forever. Praying for one is to 50 RR. That's greed, and greed will empty your account faster than any bad strategy. If the market gives you 1 to 2, take it. If it gives you 1 to 3, take it. Secure your profits. Don't turn a winning trade to a losing trade just because you were dreaming about a Lamborghini. Step 10. Realistic trade management. I like to partial out my positions. For example, take some profit at 1 to 2, secure the rest at 1 to 3, trail stops if the market gives me more. But the key is this. I'm never expecting miracles. I expect logic, I expect structure, and I expect discipline. So if you follow this step by step, your trade management becomes predictable and realistic. And that's how you build consistency. Because consistency is what will buy you freedom. Not one lucky moonshot trade. Pre-trade rules, please don't skip these. Backtest first, paper trade on demo, forward test, journal, risk 1% or max 2% per trade until proven. Use your platform MT4, MT5, or CTrader to set the lot size so the stop equals your dollar risk. Easier than doing the math. Trade only one strategy you can backtest and live with. Don't be a strategy hopper. Only take setups that are crystal clear. No ugly spikes, no newswick, no broker glitches. The refined Quasimodo checklist. Please treat this like a recipe. 1. Spot a liquidity sweep. Look for clean, visible sweeps of equal highs or lows that clearly grab stops. If the sweep looks like a one-off spike caused by news or spread, ignore it. 2. Confirm break of structure, BOS. After the sweep, you want a real BOS, not a wick poke. Candle closes should confirm the structure change. 3. Wait for a deep retracement, 50% plus. Price should retrace back into the previous shoulder area, or close to it. This retracement equals structural liquidity. Retail buyers/sellers often live here, so liquidity accumulates. 4. Look for a second BOS. After retrace, watch for another BOS in the intended direction. This confirms the market's intent. 5. Define the POI, which is the point of interest. The POI equals the zone between the liquidity sweep and the structural liquidity retrace. This is your refined limit entry zone. Place your limit order here. 6. Filter by context. Always ask, where is this forming? If the QM is forming on a failed Quasimodo that flipped into support/resistance, confidence rises a lot. If it's in the middle of nowhere, skip it. I don't take QMs unless I can answer where it's forming. 7. Place SL and TP logically stop loss. For sells, just above the protected high. For buys, just below the protected low. Targets, realistic are 1 to 2 or 1 to 3 are realistic and repeatable. Partial profits and trailing stops are good practice. 8. Use limit orders and walk away. Limits force patience. If it fills, you execute the plan. If it doesn't, don't chase. Reanalyze. 9. Journal every trade date, pair, time frame, setup type, QM sweep, BOS, retrace, POI, entry, SL, TP, result, emotions. Extra rules and hygiene. Liquidity sweeps in BOS must be visible. Avoid trading around major news unless that's part of your plan. News spikes equals false signals. If your existing strategy fails because you lack patience, translate its entries into limit rules and backtest again. You may only need a patience tweak, not a whole new system. Run at least 100 plus backtest trades for statistical comfort before risking larger capital. Final conclusion: this refined Quasimodo is not magic. It's a logical, structural, repeatable approach that rewards patience and rules. The real edge isn't a better indicator. It's the filter: clean sweeps, clear BOS, context, failed QM turned SR, then POI limit entries with proper risk. Do that consistently, and that's how accounts grow. If you want flash, go buy a rented Lambo. If you want profits, do the work. Backtest, demo, journal, repeat. If this helped, do 3 things for me. 1. Hit like and subscribe so I keep making these deep breakdowns. 2. Comment below, which pair and time frame will you test this on first? I'll give feedback. 3. When you backtest a few trades, please email me the screenshot. I'll review one and tell you what to tweak. Remember, the market won't beg you to trade. Learn to wait, and the market will start paying you. Go test it, backtest it, journal it, then come back and flex the results, not the rented car. In subsequent episodes, I will teach more advanced Quasimodo model, so turn on post notifications so you won't miss out on any of my teachings. See you on the next one.